Everyone join fast. I'll wait for 1 minute. Hi everyone, join fast. Hi. Good evening everyone, good evening. Joined everyone, ready? Chalo, let's start. Okay, not to waste any time. Good one. How many marks? ABM? Yeah. Chalo, so let's start. 58. Very good, yeah. Very, very good. Same thing in BFM. You'll clear BFM also. Don't worry. Follow the PDF which I have given. Okay. In ABM, you followed the PDF, I think so. Isn't it? The PDF which I had given for ABM, that was at BFM also. Follow the same. Don't worry about the paper. Follow the PDF, you'll clear it. Okay. And the lectures. So let's start. Okay. First one. Now, see this. This numerical was there in your June 2025 paper. This last paper, this numerical was asked. Pay attention, everyone. Okay? Quite simple, but if you pay attention. Okay? Based on the following information, answer the following questions. So, information is given. What? Currency, USD, Saudi Riyal and INR. 3 currencies are given. Rate of interest per annum, 3 months, 6 months and 12 months. Okay? 1.5, all this. Now, just go on reading this. I won't read it. So, this is 1.5%, this is 1%, 6 months. This is 2.25 and this is 3%. 5.75, 3 and 6.25. So, these are the rate of interest per annum. Okay, per annum, per annum. These are the currencies. Now, this case study was there in June 2025. First question, what will be the 6-month USD forward rate if spot dollar is 73.75? See, 6-month USD forward rate you want. 6-month USD forward rate. If spot dollar is 73.75. So now look at it, 6-month USD forward rate. Okay. So now how will you find this? How will you find this? See, it's like this. For this, there are various formulae for it. Forward rate. Okay, forward rate equals to, first you have to use this formula. 1 plus home currency upon 1 plus foreign currency equals to foreign currency forward upon spot currency spot. Pay attention. Very important numerical. 1 plus home currency upon 1 plus forward currency, foreign currency equals to forward rate, whatever is required, upon spot rate. Okay, forward upon spot. So now what is given? USD. Spot rate is given 73.75. This is given. Forward rate, that is asked. 6 months forward rate. So that is asked. Now what about this? 1 plus H upon 1 plus F. So now check the interest rates. How many months you want? 6 months. So focus on 6 months. Okay. So 1 plus home currency. What is home currency? Our home currency is what? INR. Rupee. So 1 plus 3%. So percent means write it 0.03. Divided by 100. Upon 1 plus F. Foreign currency. 1%. So 1 plus 0.01. Okay. So 1 plus 0.03 upon 1 plus 0.01 equals to F upon spot. Spot for dollar. Okay. So now solve this. Now it's very simple. Only you have to remember this formula. At any cost you have to remember this formula. Okay. At any cost you have to remember this formula. Got it? Got it everyone? Now you do the calculations. Everyone do the calculations and tell me whether you are getting the same answer. Okay. Both combined. That's a recorded session. Okay. That is a means class is on YT also. This class is available on YT also. Okay, I'll give you the Telegram link also. Everyone, see, all those who are new, kindly join the Telegram channel. On the Telegram channel, I have shared, see, Aishwarya Ramaswamy. Okay, you can take it. All those who are new, okay, kindly join the Telegram channel. Okay. Because in the Telegram channel, you will find all the PDFs which I have shared. Okay. All the PDFs which I have shared. Got it? What is it? Somebody is asking for this IPO financing margin. Madhav. IPO financing margin, that is generally 25%. That is generally 25% of the subscription value. Okay, means margin for the customer is 25% and bank provides 75%. Okay, generally that is it. Got it? Telegram link. See, it's given in the pin comment. Check the pin comment. Rekha, just check the pin comment. It's given in the pin comment. Okay? All those guys who have joined, I'll give you the PDF here also. Don't worry. All of those who have joined, I'll give you the PDF here also. Don't worry. Follow this PDF and clear the paper. Very simple. Follow the PDF and clear the paper. Okay? Follow the PDF and clear the paper. I'll give you here also. Okay? Let me see. Where is it? I'll just get it. One second. Chalo, in the meantime, you do the calculations. Everyone doing the calculations? Yeah? Everyone doing the calculations? Do the calculations, everyone. Yeah, take this now. This is what I wanted to give you. Take this. Everyone, take this. Aishwarya Ramaswamy. You take this PDF also. Okay? No option. Yeah. Take this. I have given the answer also. Madhav. So don't think about ABM now, anyone, okay? So now, got the answer everyone? 75.21, I think so. That should be the answer. Everyone take down the PDF also, what I have given. So 75.21, got it everyone? This was asked in June 25, latest exam, this question was there. Now next. What will be the 12-month USD forward rate if spot is 74? Now this you do it. Everyone try this. What will be the 12-month USD forward rate if spot is 74? Now same thing you have to use it. See 12 month. Pay attention to 12 month. Follow the same formula. 1 plus F foreign currency. H above. 1 plus H home currency upon 1 plus F foreign currency interest rate equals to forward upon spot. Follow this and what is the answer you are getting? You tell me. You all give me the answer. Very simple. You should be able to answer this. I'll just wait for your answer now. Such simple numericals. Aishwarya, go through the PDF which I have given. I have just now shared you the PDF also. Okay? Go through the PDF. You will score more than 60 in the BFM paper. 60. I am telling you 60, not even 50. I am telling you 60. Okay, go through the PDF and the classes. That's it. Okay. So what is the answer? Fast, fast, fast. Be attentive in the classes. Answer all the questions. Paper will be very easy. Are you getting it? 76.89. D. Correct? All of you got it? 76.89. See, formula is very simple. Okay? Next one. What will be the 3-month Saudi Riyal forward rate if spot rate is 19.32? Again do it. One more practice. June 25, this numerical was there. One more practice. 1 plus H upon 1 plus F equals to F upon S. Do it. Saudi Riyal. Now your home currency is INR. Home currency will never change. Only foreign currency will change. So here it is 5.75 upon F is 6.5. This F you don't know and the spot is given 19.32. Solve it now. Try it everyone. This you follow the PDF which I am giving, follow the classes, more than 60, guaranteed, more than 60, I don't even talk of 50. No, which PDF you are talking? PDF which I am giving, Amrinder. You just download it right now. Don't watch right now. Watch it afterwards. I have given you for downloading. Okay? Download it right now. Or if you are not able to download, join the Telegram channel. There also I have given it. Got it? In the Telegram channel also I have given it. So answer is 19 point. Handout 1 and 2. Yeah, it's same. It has got uploaded 2 times. It's same. Okay. So what is the answer? 19.18. Okay, 28. So nearest answer is 28. Okay, so 19.28 is the nearest answer. Got it? 18 is the answer, but you are getting it 28. So nearest answer you have to click. Okay, 19.18. 19.18. So nearest answer is 28. Click on 28. Okay? Got it? Next one. I think so 6, same one now. Yeah. So next one now. What will be the 6-month Saudi Riyal forward rate if spot is 19.50? Same thing or what? Same problem. Leave it. Now you know it. Okay. Now let's not waste the time. 19.36. Second one. Second is also difficult. If you don't understand, it's difficult. If you know the formula, it's very easy. Suppose the dollar yields 10% while pound yields 8% in a year. Okay. If the return from the pound is same as if the investor is investing in 8% this for the dollar. So if you are crossing it, calculate the comparative forward rate of dollar versus pound. So such numerical, if it comes, see, it's a very complex numerical. But if it comes, use simple formula. Forward equals to 1 plus this R dollar rate upon 1 plus pound rate, means interest rate. Okay, dollar interest, pound interest minus 1. Now see this. These numericals are not actually meant for BFM. These are very tough risk management elective numericals. But nowadays what is happening, these IIBF guys are asking so tough numericals that the level is going up and up and up. So that's why I have taken this numerical. If you get such comparative numerical, use it very simple. 1 plus dollar interest upon 1 plus pound interest minus 1. Okay. So you will get this answer directly, 12.04%. Okay. Now let's take some simple theory part. What is percent versus per mille? See, per cent means cent, 100. Mille, 1000, per 1000. Okay. So per cent means divided by 100, per mille means divided by 1000. Okay. Value date. This concept is also very important. What is value date in any forex problem? The value date is also called as settlement date. Okay, it's also called as settlement date. This is a term used to define the date on which the payment of funds or an entry into the account becomes effective or subjected to interest, if any. So, payment of funds, see, whenever the transaction is settled means what? Suppose if I give you, let's say, vegetables, okay, let's say I am a vegetable seller, okay, I am a vegetable vendor, seller, simple sabji wala, okay, I am a sabji wala. So if I give you the sabji, the vegetables, and when you give me the money, suppose if you say, sir, अरे भाई आज पैसा नहीं है कल देता हूँ, so when you give me the payment, at that time the settlement is done. So that is known as value date. Whenever the funds are settled, okay. So value date is generally in forex which date? Whenever there is a credit to the nostro account. Whenever your nostro account or vostro account is credited, at that time it is called as value date. Credited. Whenever it is credited. Then settlement date. This is another definition of value date. Means both of them are called as value dates. Okay. Chain rule. Now this chain rule was there in your JAIIB also, here also. Chain rule is used whenever you don't know the rates between the two currencies. For example, euro versus rupees. If you don't know, euro versus rupee, you don't know the rate of euro to rupee. But you know euro to dollar and dollar to rupee. Then what will you do? You will bring in dollar. Dollar is a universal currency as of now. As of now, dollar is a universal currency. Okay. So, euro upon dollar into dollar upon rupee. That is called as your chain rule. Okay. What is the universal currency? If somebody asks you, okay, what is the universal currency? What do you mean by this? Universal currency means which does not have any risk. Any risk of failure is not there. So up till now, see, I am saying up till now, I am not saying constantly. Up till now, USD is the universal currency. After 2 years, what will it be? I don't know. Means no one can tell. Because I don't see, I myself am very doubtful about this universal currency after some years. So, leave it. Arbitrage. What is arbitrage? 3 words are very important for you in your BFM. 3 words, very important. One is arbitrage. Second one is hedge. And third one is leverage. These 3 words, I'll frankly tell you, your entire BFM portion is based on either arbitrage or hedge or leverage. You call it module C, you call it module D, you call it module B, you call it anything, module A, forex. Everything is based on these 3 words only. Either it is arbitrage or it's hedge or it's leverage. Now what do you mean by these 3 words? Pay attention everyone. These 3 words form the base of your BFM. Arbitrage means what? I will buy in one market and sell it into another. Immediately. I will buy it in one market and sell in another. Immediately. Means what? What do you mean by this? See this. Suppose I am dealing in the stock market. Okay? I am dealing in the stock market, buying shares. There are 2 stock markets in our country, right? You know all, NSE and BSE. 2 stock exchanges. Now imagine the share of TCS. Okay, the share of TCS. At one moment, at any moment during the market hours, the share of TCS on NSE is 2000 rupees. And on BSE it is 2002. This happens on the 2 stock exchanges. There is a difference. This difference remains hardly for 3 to 4 seconds. Hardly. Within 3-4 seconds, this difference collapses and both become same. Okay. Now what is arbitrage then? In arbitrage, what do I do? Within these 4 seconds, what will I do? I'll purchase at NSE 1 lakh shares. 1 lakh shares of TCS I'll purchase at NSC right now, and immediately, same second, I'll press another computer, means I'll have two laptops. On one laptop, I'll put a buy for TCS right now at this moment, and same moment I'll put on the second laptop sell. So what will happen over here? I have purchased for 2000 and sold for 2002. You'll say, sir, only 2 rupees. Why to take this risk? But I have purchased 1 lakh shares. I have sold 1 lakh shares. So 2 lakh rupees I have earned in 1 second. 2 lakh rupees I have earned in 1 second. Okay? Got it? Yeah, Bhavani, I'll explain you. Force majeure. 2 lakh rupees I have earned in 1 second. So this is known as arbitrage. Second one is hedge. Hedge means what? Again, covering your risk. Covering your risk means what? See, in our bank we give loans, right? When we give the loans, we do one thing. We take collateral. Why do we take collateral? So that if tomorrow this loan becomes NPA, I can sell the collateral and recover some part. That is known as hedge. Same thing hedge you do in your bike insurance also. You all have the bike, right? You all have the bike, right? So bike insurance, why do we buy insurance for bike? Right? Why do we buy insurance for bike? To hedge. Tomorrow if there is an accident, I'll get some money from that insurance company. Third one, leverage. What is leverage? Leverage means what? Amdani athanni kharcha rupaya. You heard this? Amdani athanni kharcha rupaya. What do? I am earning 10 rupees. I will take a leverage on that and get a loan of 50 rupees. I am earning 10 rupees and get a loan of 50 rupees. Here and there I'll invest some money and then I'll get this leverage. I'll give you an example. What will I do? I'll take a loan against property from you, LAP. You know, all of you know LAP, loan against property, right? 62 in ABM, my God. 62, Cyan Paul got 62 in ABM, just followed the classes. Very good, yeah. Very good, Cyan. Congrats once again. It's your hard work, okay? Yeah. Even Reshma, I know she got good marks over here. See, all of you will follow sincerely the PDF and the class, 60 plus guaranteed. So now, leverage. I'll take a LAP from you, loan against property from you. Rohit, you got 51. Very good, yeah. All of you got good marks. So, let's say I'll take a LAP from you, loan against property from you. And what will I do with that LAP? See, I'll give you a simple example. I take a LAP of, let's say my property is of 100 rupees. My property is of 100 rupees. I'll take a LAP from you. You'll give me around 80%. Or normally banks give 70%. Okay. So I'll take 70% loan from you. On 100 rupees, I'll take 70 rupees loan from you. From that 70 rupees, what will I do? I'll buy another property with that 70 rupees. Again, I'll come for LAP with you. So again, you'll give 70%. So you'll give how much? 49 rupees now. Now with that 49 rupees, I'll buy another property. Again, come for LAP with you. So what is happening? What am I doing? I am using your money for buying more properties and again taking LAP from you. This is leverage. Okay, this is leverage. Means, is my actual income, my actual amount of actual property is what? Only 100 rupees property I am having. But I purchased a property of more than around, say this 49 and then again 64, what was it? 75, then 64, many things, no? Like this. 100, 70, 49, then go on down. This is what leverage is. Okay? So these three words should be very clear in your mind. Very clear. You must understand the concept behind these three words. Okay? Concept is very important. Kindly note, everyone. If you have the concepts clear, everything is easy. Okay, I'll give you an example of arbitrage. Okay, arbitrage. See, there is two countries are there. Let's say USA and England. Okay, USA and England. Now what happens? USA the interest rates are 3% and England the interest rates are 6%. This numerical has come actually in exam. USA the interest rates are 3% and England the interest rates are 6%. And let's say the currency rate of pound to dollar is 1.5. Means 1 pound equals to 1.5 USD. 1 pound equals to 1.5 USD. This is 1.5. Okay, and the interest rates in USD are 3%, in England are 6%. So what will I do? As a banker, what will I do? Let's say I am working in treasury. What will I do? I can see the difference. See, 3% over here, 6% over here. What will I do? I'll take a loan from USA. Loan. For how much? USD 150. Okay, simple example I'm giving. USD 150, I'll take the loan. Okay. Loan means how much interest will I pay at the year end? 150 rupee dollar loan. So interest is 3%. So 150 into 3%, $4.5. So this much is the interest I'll be paying. Simple. This much is the interest I'll be paying. Done. What will I do? This $150 which I have taken as a loan, I'll go to England. But in England, what do I require? I require pound. So what will I do? I'll convert this dollar to pound. Now what is the rate? 1.5. So this will become 100 pounds now. Why? Because pound is costlier than dollar. So $150 upon 1.5. Kindly note, upon, because pound is costlier. So this will become 100 pound. Now what will I do? I'll take this 100 pound and put an FD in England. FD. Okay, and FD in England. So what will happen now? After 1 year, same day, I'm doing everything same day. Same day. You'll say, sir, how is it possible? Take money from USA, England. See, all these are possible within seconds now. Now we are dealing in treasury. Open market we are dealing in. Okay, so everything is possible in seconds. So what will I do? I'll take this 100 pound and put FD in England. So how much will I earn? At the year end, I earn 6%. So 6% means 6 pounds I'll earn. But I have to pay in USA because this is my interest which I have to pay. For that, what will I do? I'll convert this pound again in dollars. So the rate is again 1.5. So 6 into 1.5. Now I'll multiply because pound is cheaper. Dollar is cheaper. So 6 into 1.5. So it is $9. So after 1 year, I have earned $9 and I have paid $4.5. So how much is my net income? $4.5. Net income. See, imagine net income is 4.5 without doing anything. Did I do anything? Did I do any job? Did I do any work? No, nothing. Right? So that's it. This is known as arbitrage. This is known as arbitrage. Without doing the work, I am earning. Okay? Has anyone of you seen the Elon Musk interview yesterday? Elon Musk interview with Nikhil Kamath. Has anyone seen? If you have not seen, spend 1.5 hours interview it is. Spend the 1.5 hours and listen to that interview. What that guy is saying. Imagine, always remember what you are earning in throughout your lifetime, let's say, forget 1 year, 2 year, throughout your lifetime, till the time you live. Elon Musk is earning per hour. Per hour, that much Elon Musk is earning. Whatever you earn, you and me, not even you, even me, whatever we earn throughout our life, Elon Musk is earning per hour. Not even per hour. Half an hour, 10 minutes he might be earning. Imagine what that guy might be talking. This person is talking about life without work. Kindly watch. 1.5 hour interview, but do watch it. Don't miss this. It's available on YouTube. Okay? Chalo, let's move on. Now watch I would say after the CAIIB exam. Watch it now only. What happens in CAIIB exam? Nothing happens. Okay? Watch it. Chalo. Now, what is this two-center arbitrage and three-center arbitrage? There are two terms, two-center arbitrage and three-center arbitrage. It's called as simple arbitrage, means there are only two centers involved, so it's called as simple arbitrage. One side buy, one side sell. In America buy, England put FD. So two centers. So that's called as simple this arbitrage. If I am having multiple centers, taking the money from USA, putting it in England, and converting it to rupee, then converting it to some other currency, euro, and then putting, then it's called as multiple arbitrage. Okay. So compound arbitrage and simple arbitrage. Got it? In arbitrage, the most important point is speed. Kindly understand. The most important point is speed. If you miss out on speed, you are gone. Okay? If you miss out on speed, you are gone. Okay? Kindly remember this. Getting this, everyone? In arbitrage, the most important point is speed. Pay attention. Chalo. Let's move on. So now, next, now focus on the numericals. Okay, all the numericals again. On 15th September, customer requests for booking a forward contract for export bill for USD 1,50,000 to be realized in the month of December. Okay, so kindly note, 15th September customer is requesting for an export bill of USD 1,50,000 to be realized in the month of December. In the month of December. Given USD annual spot rate is 75.4550 and forward premium is as under 18, 19, 30, 32 and 41, 43. These are for the 3 months. Margin to be charged is 0.05 paise per USD. Calculate the forward rate to be quoted to the customer. So you have to quote the forward rate now. Okay. So pay attention. Pay attention to this numerical. I'll explain you all the concepts over here. All the concepts. Okay. All the concepts will be explained to you. Got it? So pay attention to this, whatever I am telling you now. Okay? Chalo, move on. First thing what you should note, always, in any forex problem, see, this I'll be telling you only once now. I won't be telling you again and again. Because only 6 days are left. So, I'll be telling you only once. Any forex problem, you have to focus on these 3 points only. Only these 3 points. Buy or sell, forward points, TT margin. That's it. Buy or sell, forward points, TT margin. This is the only thing which should be very important for you. Okay? Always. Now further things. Okay? Buy or sell means what? See, whenever you are, see this, buy or sell. Whenever you are doing any export, you are buying, pay attention. Whenever you are doing any export, you are buying any export transaction. Whenever you are doing any import transaction, you are selling. Okay? Export transaction buy, import transaction sell. Forward margin. Whenever you have premium, you have to add. Whenever you have discount, you have to subtract. Don't forget this. Okay, this is the basic of your forex. Forward margin, premium plus discount minus. But what is premium? What is premium? Premium means this. Whenever the right side is bigger, this is called as premium. Whenever left side is bigger, this is called as discount. So here we have premium currency. Do not forget these basics. I am again telling you. Remember this and you will gain around 10 to 12 marks in your BFM paper. 10 to 12 marks just on these basics. Forward margin done, premium done, TT now. Whenever you are dealing with TT margin or exchange margin, there are 2 words. Okay? Either we call it TT margin or we call it exchange margin. Exchange. You call it anything. TT margin or exchange margin. Whenever we sell, Whenever you sell, you should add. Whenever you sell, you should add. Whenever you buy, you should subtract. You'll say, sir, how to remember this? So difficult. Many of you will say, sir, how to remember this? See, I'll tell you a simple trick. What is the spelling of sale? What is the spelling of sale? S-A-L-E. Sale. So S and A. Whenever you are selling, A is add. Selling, add. Selling, add. Selling, add. And remaining you can remember. Buying minus. Once you remember one, second thing you can remember it. Forward margin. Premium plus. See, PP. Premium plus. Premium plus. Remember it this way. Premium plus. Okay. Export is buy. Export is buy. So this is what, how will you remember this? Those who are from engineering, they remember it easily. BE. We have a degree called as BE. Right? So BE degree. Buy for exports. Kindly remember this. So 1, 2, 3 done. Now fourth one. Very, 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 1,000 times very important. First and the last day of any month, you will not use buy low, sell high maxim. First and the last day of a month, you will not use buy low, sell high maxim. Okay? Whenever the transaction is in between, you will use buy low, sell high maxim. Or theorem you can call it. It's actually maxim. Right word is maxim. Maxim means rule. What is maxim? Rule. Buy low, sell high rule. First day and the last day, any transaction is happening, you will not use buy low, sell high. Whenever it's in between, you will use buy low, sell high. And last one, whenever you want a rate on the first day of any month, use always the earlier month rate. Earlier month rate you will use. So now all of you have got these 5, understood these 5. Have all of you understood these 5? Type yes in the comment section, then only I will move ahead. If you have understood these 5, type yes, then only I will move ahead. Okay? Got it? Because this is the basic of any forex. Any forex. This is the basic. Got it? Move on. Chalo. Now let's move to the problem. Now follow the rules which I told you. Buy low, sell high, forward points and TT margin. This is what you have to follow. Okay? Follow this concept. So let's move on. Yes. Okay. All are yes. So let me move on now. So let's move on with this problem now. See, what is the problem? On 15th September, this customer has come to you to book a forward rate which is realized in the month of December. In the month. Understand the word in the month. In the month means what? Is it first day or last day? No, it is in between. In the month, in between. Now you must understand this. Whenever I said in the month, so it means what? I'll be using rule number 5, which one? 4th, between, buy low, sell high. So I'll use this rule now, buy low, sell high. So on 15th September, this is my today. This customer has come to book a rate which is on, let's say, example, I'm giving December 10th. In the month, I'm giving December 10th. So this is lying on between December 1 and December 31, isn't it? December 10th is lying between first and the last day. So now what you have to do is, your target is get the rates on first day and last day. Get the rates. So how will you get the rates? September 15th, what is the rate given? 75.4550. Which one will I use? 45 or 50? First thing, buy or sell. Whenever you are doing a buy, you will use this first rate. Buy is always on the left side, sell is always on the right side. So buy 75.45. Export, buy. Export equals to buy. So you will be using this 75.45. Now, December 10th rate you want. But for that, December 1 and December 31 you want. Always remember the rates given over here Pay attention. Huh? The rates given over here are for the last day of the month. Last day. So, whenever I am saying December rate is 41, 43. So, 41. Okay, forget 43 now. We are buying. So, left. So, this 41 will come at the end of the month. This 41 is over here, not over here. So, which is the rate over here then? December 1. What is the rate on December 1? What did I say? First day of the month, rate is earlier month. So, here I'll be using November rate, 30. 30 I'll be using. Always remember these basics. Never ever forget these basics. First day of the month, earlier month rate. First day and last day, no buy low sell high. Between, buy low sell high. Okay? So now, two rates you have got. 30 you have got it over here, and this you have got it 41 over here. Clear? 30 and 41. But these are just forward points. These are just forward points. You want the actual rate. Actual rate is what? Spot plus forward. So 75.45 plus 30. So 75.75. And here 75.45 plus 41. So 75.86. So 7586. Now this is our rate is in between. So what will we do? Buy low, sell high. So what am I doing now? Am I buying or selling? Export equals to buy. So I'll be using buy. Buy means what? Low. Low means what? This. So what is my rate? 75.75, not 86. I'm doing buy low. Okay, got it everyone? Buy low, I'm getting this. Okay, clear this part everyone? Chalo, next one. Yeah, the duration is 2 hours. Okay, class is for 2 hours. Next one. Forward, move ahead. So this is done now. Next now, what is given? TT margin is given 0.05 paise per USD. So what did I say about TT margin? Sale is plus, buy is minus. So here what am I doing? Buy. So 75.75 minus 0.05. See this, it's directly given in paise. So 75.75 minus 0.05. So 75.70. This is your final rate. See, all the 3 points are covered. Buy or sell, done. Buy. Forward points, done. TT margin, done. This. So now your rate, 75.70. Got it. Okay. Now my question to you is, pay attention to my question now. My question to you is now, suppose if I want to do the transaction on December end. If I want to do the transaction on December 31, suppose if this customer comes for the same bill to be realized on 31st December. Same everything. Then you tell me what will be the rate to be applied. 31st December I want the rate now. I am a customer, I have come to you for 31st December. Now you give me the rate. What rate will you apply? Fast. Yes. Correct. 75.86 you will apply. First day or last day, no, nothing doing. Whatever rate you got, take the answer. Similarly for this one, suppose if I come on December 1, for transaction to be done on December 1 or November 30th, any of these. If it is expiring on November 30th also, then also same answer. December 1, then also same answer. December 1 and November 30th, same answer you will get. Clear? Move on. Next. This is the most toughest numerical which is asked in the exams. This one. And you will get it. This time also you will get it. Okay? This time also you will get it. Got it? What is it? No margin to be added. No, it is margin means in the sense. What margin are you talking of, Reshma? Margin to be added. TT margin, no? It is to be added. It is to be subtracted. No? Even on day end, month end, you have to do this. See, TT margin will be there. Pay attention. All you guys kindly understand, let it be first day, last day, whatever it is. TT margin will be there. There is no escape to TT margin. Got it? TT margin will be there. Yeah, so it will be some change. Okay, it might be some changes over there. Let me see. On 31, this 86 plus this. Yeah, correct. So the rate will be different. 86 minus 0.5 it will be, 0.5. So 81 it will be. Correct. The rate will be 81 at that time. Okay. So now, this is one of the toughest numericals which you get in the exam, and it is there in the exam. Kindly note, it is there. This exam also you will get it. Either they ask you as a full numerical for 5 marks, or they ask you this part of rate of cancellation. They will ask you either cancellation or full numerical. Anything that they'll ask you. A forward purchase contract of USD 5 lakh backed 2 months, booked 2 months back at 75.25 is due for delivery 2 days later. So spot. 2 days later means spot. What is spot? Transaction plus 2, right? Spot. Tom means what? T plus 1. Cash means what? Same day, right? So forward rate USD 5 lakh booked 2 months back at 75.25. See, here only one rate is given. If you are paying attention, you will note one thing. Only one rate is given over here, right? So when you are given the one rate only, let me draw it this way. Yes. One sec. Okay. So whenever you are given only one rate, in this case, kindly note, you will take the same rate for buy also, sell also, both. Okay. So this transaction was booked 2 months back at 75.25 is due for delivery 2 days later. The customer is informed by the drawee of the bill that the payment will be delayed by 1 month. See, this is the problem now. The buyer has told that, see, I won't pay tomorrow. He was to pay tomorrow actually, means 2 days later. But he's saying now, I won't pay tomorrow now. I'll be paying after 1 month. So buyer will say, I'll pay after 1 month. But what will you have to do? You are banker. You will have to cancel this contract which was booked 2 months back. Cancel this contract and then book a new contract for 1 month. Got it? So now remaining facts are given. Given the interbank spot rate is 75.5675, 5775 and 1 month forward rate is 9-10 paise. Margin on TT buying and TT selling is 0.15%. See, TT buying, TT selling, same margin is given, 0.15%. Calculate the rate for cancellation. So either you will get only this much, up to this only, up to this. They will give you only up to this, or they will give you further also. Okay? So, and also the rate for rebooking. Also calculate amount debited to credit or credited to the customer. Okay, debited or credited to the customer. So now let's calculate. See what is done. Understand the problem first. There was a contract which was booked 2 months back. Now it is due today. Today means spot. Okay. But the customer is saying, I won't pay today. I will pay after 1 month. So now what will I have to do? I'll have to shift this payment date from today to 1 month. So 2 things I am doing. One, this earlier contract which I had booked, I will cancel this. Second, I will book a new contract. So now let's start doing this. Break the problem into 2 parts. Either in exam you will be given only one part, rate for cancellation, only up to year. They will give you only up to year. They won't give you this part. It can be anything. But we'll be prepared for the worst. Let's be prepared for the worst. Okay. So now what happens? Let's do one by one. Okay. So first transaction, see this. Let's say this transaction was booked 2 months back. What is it? 2 months back. Okay. So let's say this is June when the transaction was booked. This was 2 months back. And today is what? August. July, August. Okay. So today is August. This was booked 2 months back. June. Got it? So now this contract was booked at what? What was this contract? a forward purchase contract was booked. Purchase means this was a export at that time, right? This was an export. So purchase contract was booked. So bank had purchased the dollar at that time. Purchase was done. Okay. So understand one basic. Whenever you purchase the dollar, see, it's like the vegetables. If you go to the vegetable shop and you purchase the vegetable, means what? You will get the vegetable, and what will you do? You will give the rupees to that vegetable vendor, right? So the exchange is what? Vegetable and rupees. So here also bank is doing what? Bank has purchased the dollar at that time. Dollar is purchased. So this is vegetable. So bank had purchased the dollar. So bank will give rupees to this client. 2 months before, bank had given rupees to this client, either given or booked. Okay, fixed the rate. So understand this. Bank had taken the dollars and given rupees at that time. Today, what is the bank doing? Bank has to cancel it because this earlier contract is to be cancelled. I have to book a new contract. So what will the bank do now? In this case, bank will do the reverse transaction now. Your dollar I had purchased, here I'll sell the dollars. So I'll sell the dollars means what? Again sabji wala. Now I am the sabji wala. See this. Now I am the sabji wala as a bank. I am selling sabji and I am getting rupees. So sold the dollars and got the rupees. So look at the transactions. Focus on the transaction only. Okay? This is old transaction. New we will see to it later. This 1 month later part we will see later, not right now. Okay? So now let's start this old transaction only. June last. What did I buy? See, what is the rate given? 75.25. This is the rate given. So this rate I purchased, but there is also TT margin. Look at this. TT margin is 0.15. So this I'll have to use. See this. 75.25 into 0.15 upon 100 TT margin. So if you do the multiplication, you will get it as 0.112. So what should I do with this TT now? This was a buy transaction at that time. Buy means subtract. So 75.25 minus 0.112. Clear? Getting this? So 75.138. So this is the rate at which I had purchased the dollars. I had got the dollars. So I had got the dollars means what? I have given to this customer 5 lakh dollars. See this contract is for 5 lakh dollars. So I have purchased 5 lakh dollars. So how many rupees will I give to this guy? 5 lakh into 75.138. Isn't it this rate? I'll give it. So the amount comes to 3 crore 75 lakh 69,000 received by the customer. Customer has received it. Either received it or contract to receive it. So it's one and the same. Okay. So let's say received by the customer. Now today what is happening? Today I have to cancel this. Everyone is getting this. Everyone is getting now. Getting it now? All are on the same page, or am I going too fast? Tell me everyone, am I going too fast or you are on the same page with me? Am I going too fast? Everyone, pay attention. Okay, clear now? Nothing difficult, right? Chalo, yeah. Got it? Not fast now? Yeah. Chalo. Let's move on. See, otherwise the portion will not be completed. Okay? Means major numericals will be completing this over here. So now let's go for the reverse part. Now reverse part is what? This dollar I had purchased at that time. Now I am selling the dollars. So what is the selling rate? Now look at it. Now what is the selling rate? Let's look at it. See. Given the interbank spot rate as 75.5675, 5775. See, what am I doing now? Earlier I had purchased it. Now I am selling it. So selling means what? Which rate will I use? You tell me now. Which rate will I use? 76.5775. This I will be using. Why? Because this is buy. This is sell. And I am doing it today. At today's rate I am doing it. Today means spot. So I'll be dealing with 76.5775. So this rate I'll be using for selling today. Getting it? So use it now. 76.5775. But again TT margin. 76.5775 into 0.15 upon 100. This is simple. What is the answer? 0.1148. You all try on the calci. Everyone tried on the calci. So 0.1148. But what will I do with this? Should I add or subtract? What am I doing now? I am selling. Selling means add. So 76.5775 plus 0.1148 plus. Always remember, spelling of sale is what? S-A-L-E. So S and A will always be together. Selling means add. So 76.5775 plus 0.1148. So add this. You will get the answer as 76.6923. Okay. So what will I do now? Multiply it. 5 lakhs. See, same amount 5 lakhs was purchased. Now 5 lakhs selling. So 5 lakhs into 76.6923. So multiply this, you will get it as 3 crore 83 lakh 46,150. This much is the, see, what earlier dollars in, now dollar out. So rupees in. So I will debit to the customer this amount, 3 crore 83 lakhs. Here I had credited the customer. So now look at it, what is happening. Debit is 3 crore 83 lakh, credit is 3 crore 75 lakhs. So what am I doing? Customer will be debited with this amount, 7 lakh 77,000. If you subtract this, 7 lakh 77,000 is a nuksan, loss to the customer. Loss to the customer means profit to the bank. It is a profit to the bank. So here you debit the customer by 7 lakh 77,000. Okay, because you have given this much, you are taking this much. So net debit will be subtraction of this. Got it, everyone? So now look at this. 3 problems were asked. Rate for cancellation, rebooking for 1 month, and debit credit to the customer. So now debit credit is over, rate for cancellation is over. Rebooking for 1 month. Okay. Now there is one more part given. Rate to be quoted near 0.25 paise. If they give you, take these rates as nearest 0.25 paise. 57 will go to, let's say, 50. Okay. This will go to 75.138. Right. So this will go to 75. Okay. So that way you can take it, but in exam nowadays they don't ask you nearest 0.25, not required as such. So this part is over now. Now the new rate for cancellation, new rate for booking. See, now I have to book it for next 1 month. So what is my spot rate now? See, what will I book now? Again I'll have to book the old contract. This one, buy. Buy I had done, then sell. Again buy now. So I'll have to book the buy contract. At what rate? 76.5675. Look at this rate. Spot rate is given as 76.5675 and there is a 1 month forward margin of 9-10 paise. So 9-10 paise forward margin is also there. So let's look at it. 76.5, what is this? 5675 plus this forward margin 09, right? Because it's in premium. Premium means 76.5675 plus 76.6575. If you add this, you will get it as 6575. Okay. So now what? What next? These two are the rates. Okay. So now you will again book the rates. At what rate? Will you book it at 5675 or will you book it at 6575? Buy low. What are you doing now? You are doing the buying transaction. Buy. So buy low, okay? Buy low, okay? See, actually you are doing the transaction on this date only, okay? Will you use buy low, sell high or will you not use buy low, sell high? You tell me, everyone. I am booking the contract for last date of this 1 month, whatever this date is, okay? So This contract I am booking for 1 month, fixed rate I am getting. So here you can directly use this 76.6575. You can use it this way also. When you know the exact date, use the exact rates. Because now you know the exact date. See, earlier contract was what? Earlier contract was somewhere in the month, in the month. Okay. Now it is exactly you know it. That 1 month you have to book it. 1 month, when you know exactly 1 month you have to book it, use the same rate. Don't use this buy low sell high concept over here. See, buy low sell high is used when you don't know the exact date. When you know the exact date, no buy low sell high. Take the fixed rate. So you know now this is going to end on this month, this date. So take it directly, 76.6575 into 0.15 upon 100, this answer, and subtract it by. So 76.54. Okay, take it and then multiply. This is the rate for the next forward booking. Got it? Clear? Next one. Now this one, let me see. It is same. This is a bit reverse. On 1 June, customer requests to book a forward contract for retirement of import bill. Pay attention. It is an import bill now. Are you with me, all of you? Yeah. All of you with me now? If you are finding it difficult, kindly revise this. Okay? Go for the revision again. Recorded videos are available. Okay? So, now see this. This is the reverse transaction. Customer requests to book a forward contract to retirement of import bill. So, import means what? Import means sell. Always remember these three basics. Buy or sell, forward, TT margin. Don't miss on these three basics. So now what is he doing? He wants to retire an import bill. Okay, on due for payment on 15th September. 15th September is what? In between. 15th September is in between of September 1 and September last. Whatever it is, 30th. Okay. So these rates are given. Check the rates. Spot USD INR is 75.2729. So spot is this much. Forward for June is 10.12. July is 21.23. Spot August is 32.34. September is 43.45. And look at it. There is one more forward given. August to 15th September. See, this is given as August to 15th September. So now pay attention to this problem. This is not in between September 1 and September 30th. They have given you exact date and exact forward. So they have given the exact forward rate also. Now you will not be using buy low sell high. Why? Because although it is in between, say this. Although it is in between, but then also you have been given this forward rate directly. So now there are two twists in this problem. Double twist ka problem hai ye, double twist. One is forward is given, and second, look at this. Charge margin of 0.2% on the spot rate. This is second twist. Generally, margin we charge how? How do we charge the margin? See, margin we always charge. Look at this problem, earlier one. How did we charge the margin? We charge the margin on the last rate which we got. After solving all this thing, doing forward and everything we did. And then we charge the TT margin on the last rate which we got. But here they are saying charge a margin on the spot rate only. So you let the rate come anything. You will have to charge the margin on this 75.29 now. Import na? Import. So 29. Right side. So this is a twist. Okay, two twists in this problem. No buy low sell high and TT margin. These are the two twists. So let's solve this. On 1st June, this customer has come for retirement on 15th September. Okay, import bill. So sell. Got it? So what will you do? TT means bill rate. Okay, so spot plus premium, right? So this is premium or discount? 10-12 premium, 28-23 discount, premium. See, everything is premium. Okay. So when you are having everything as premium, what will you do? Add. So now let's start this problem. June 1. What is the rate? Spot rate. This is June 1. Spot rate 75.29. Why 29? Because import, right? So now, what is it I want? September 15th I want. September 15th I'll take September 1 plus and September 13. Why? Because see this, they have given the rate of August to 15 September. So August end and 15 September, this they have given. Okay. So now, June 1 to September 1. What is September 1? Look at this. On September 1, which rate will I take? On September 1, which rate will I take? You tell me all. On September 1, which rate should I take from this? You only tell me. Which rate should I take on September 1? I will take earlier month rate. Just now I told you, August end. September's earlier month is August. So I'll take 32. So 32 I am adding. See this, 34. Import. So 34. So 75.29, your spot, and 34. Now what will I do with this? Plus or minus? I am doing sale. So will I plus or minus? Kindly note, forward margin has nothing to do with buy or sell. Pay attention to my words. Forward margin has nothing to do with buy or sell. It has only to do with premium or discount. Forward margin is only focused on premium or discount. Buy or sell will be for the remaining two. Means which one? TT margin. TT margin buy is minus, sale is plus. And that first one, export import. Export is buy, import is plus, this one. What? Sell. Right? So forward margin has nothing to do with your buy or sell. So now, forward margin is what? 34. 34 is given over here, so it is premium. Currency is premium, 20 and 23, right side bigger. 30 to 34, right side bigger. So I'll add 75.29 plus 34. So 75.63. So on September 1 or August end, my rate is 75.63. Now September 15th I want. They have given the forward rate. So August to September 15 they have given 67. So again 67 means what? 0607. 0607. So again what will I do? I'll add this 63 plus 07. Why plus? Because it's in premium. So what is my rate? 75.63 plus 0.07. So 75.70. This is my final rate. But is it final? No. Final up to what? Buy low done, forward margin done. TT is still remaining. Charge margin of 0.2%. So 75.70 into no, not on 75.70. Should I charge the TT margin on 75.70? No. Why? Because it is mentioned on the spot rate. So 0.2 upon 100 into spot 75.29. See this, not on 70. It's given. See, whenever it's mentioned in the problem, the charge margin on the spot rate, then only do it spot rate. If it's not mentioned, only they'll say charge margin of 0.2%. That's it. Full stop over here. No spot rate, nothing. Then it means you'll do it on the last rate. You'll do it on the last rate. Got it? So now, what is the answer I am getting? 0.2 upon 100 into 75.29. So 0.1505. Take only 0.15. Forget this remaining 2. So what will I do? It's sale. Sale means import sale. So 75.70 plus 0.15. So 75.85. This is my final rate. This is my final rate. Got it, everyone? Pay attention to the numericals. Okay, very important ones. Okay. Yeah, you can access the recorded version also. Not an issue. You can access the recorded version also. Okay. repeat possible. This is revision class, dear. If I go on repeating this class, this lecture, all will get. It's very simple. Okay, just follow this video again. Repeat is not possible over here. Otherwise, we'll miss the portion. Okay? Done, everyone? Kindly, those who didn't understand this, kindly go through it again. Recorded sessions are available. Else you'll miss the portion. Now, few more points I'll tell you. See this. Very important part is over here. Import bill. Now you have to understand something important over here. The important part over here is import bill. Bill means what? Bill means post shipment. Whenever you get the word bill, it means post shipment. Whenever you get the word LC or order, it is pre shipment. Whenever you get the word bill, it is post shipment. Whenever you get the word LC or order, okay, it is pre-shipment. Pay attention. Okay? Got it, everyone? LC or order, pre-shipment. If you get the word bill, it is post-shipment. Okay? So now, what is there in pre-shipment and post-shipment? What is there in pre and post-shipment? In pre and post-shipment, see, yeah. If same is coming, sir, first add margin. What margin? You mean to say first you want to add margin? TT margin you want to add first? No, don't do it. Shailaja, what I want, I got it, what you want. Your point is over this. I got your point, what you are saying. Should you add the margin first and forward later? Okay, acha, you are doing the same. Forward you are adding the margin first. Okay, no issues. In this problem there is no issue. Kindly note this problem. Which one? This one. In this problem there is no issue. Why? Because you are adding it on spot rate. But in other problems where it's not mentioned to add on charge margin on spot rate, then the answer will be different. Okay, then the answer will be different. Okay, in this problem it doesn't affect. Why? Because you are charging it on spot rate only. Got it, Shailaja? So now, pay attention to whatever I am saying. See this. Post-shipment finance and pre-shipment. Pre-shipment is always given 75 to 80% of FOB value. Pay attention. 75 to 80% of FOB value, free on board value. Post shipment is always given 100% of the value of the transaction value. 100%. Pay attention. Okay. What is post shipment? Post shipment means actually this person has, pay attention to this. Actually this person has post shipment. He has put the goods on the ship. The ship is gone. He has put the goods, manufactured the goods, put the goods on the ship, and ship is gone now. This is post shipment. Pre means what? He is manufacturing. He has still not sent the goods. He is manufacturing. So for manufacturing, you will always finance on FOB basis, free on board. What is FOB? These are Incoterms. What are Incoterms? We will see that. I will show you. Incoterms I will show you today. Not an issue. Pre-shipment is always done for 75%. Post-shipment is always done for 100%. There are 6 types of documents available in any trade document. 2I, 2B, PC. 2I means invoice insurance. 2B means bill of lading, bill of exchange. PC means packing list and CO. 2I, 2B, PC. 2I, 2B, PC. Okay? Out of these 6 documents, 3 are negotiable. Insurance is negotiable. Bill of exchange is negotiable. Bill of lading is negotiable. These 3 are negotiable. Remaining are not negotiable. Okay? So now, I told you I'll show you Incoterms. So let me show you Incoterms. Okay? Hold on. Give me 1 minute. I'll bring the Incoterms slide. We are over here. PCLC. C for certificate of origin. C is certificate of origin. Soma. Okay, I'll show you again. Not an issue. Okay, I'll show you all of them again. Don't worry. Okay. See this. We are over here. See this. It is this. PC means packing list and certificate of origin. PC means packing list and certificate of origin. Okay. So 2I, 2B, PC. Invoice insurance, bill of lading, bill of exchange, PC is packing list and CO. Okay, got it? So now Incoterms. What do we mean by Incoterms? Incoterms is actually the risk which is transferred from seller to buyer. Incoterms is actually the risk which is transferred from seller to buyer. Means what? What do you mean by this? Pay attention. There are total 11 Incoterms, out of which 3 to 4 are asked to you in exam. 3 to 4 means some way or the other they'll ask you. Latest Incoterm is Incoterm 2020, which we are following. Okay. Right now in the world, we are going with Incoterms 2020. Okay. UCP is UCP 600. ISBP is ISBP 821. See, there are few terms which you need to remember. Now I won't say understand. UCP going on is Uniform Credits and Customs and Practices for Documentary Credit. UCP 600 in international trade. ISBP is ISBP 821. Third is ISP 98, Standby Credits. ISB 98. URR 725 and EUCP 2.1. So, you don't go deep into this. This is for CDCS. Those who will clear CAIIB, I will tell you about CDCS later. First clear CAIIB, then I will tell you about CDCS. That is a higher level exam, okay, for bankers. Those who want to do their career in trade finance, very lucrative field. For them, we have CDCS, okay. That is not conducted by any company, anyone in our country. It is conducted by LIBF London. Contact me separately for this, not now. We at Adda teach that also, but forget it. Now you focus on CAIIB. So Incoterms 2020. What is Incoterms 2020? See, Incoterms means what? I am the seller, you are the buyer. Okay? So we will decide. I will say that. See, I am Reliance. Let's say I am Reliance. Big seller. I am a big company, Reliance. I will say, see, you want the goods from me? You come to my shop. I will sell the goods over here only, on my shop. You take the goods however you want. Right? So that is known as Ex Works. Remember, do you remember this when you used to buy the fridge earlier, refrigerator, TV, fridge? In your childhood, you might have purchased the fridge and TV, right? How did you purchase? You went to the shop, that refrigerator shop or TV shop, right? That person sold that TV in the shop. Then remaining things like you need to book a tempo for that carriage and you used to bring it at home. So that is Ex Works. That person says, I will sell it in my shop. You take this from here and however you want to take it. So here the risk of the fridge ends at the shop only. If tomorrow while traveling, this fridge falls down, falls down this fridge, or this TV falls down, so it's a loss. But who will bear the loss? You will bear the loss. Shopkeeper will not bear. He'll say, see, I have sold it. From my shop it is gone, it's gone. So that is known as Ex Works. But now one more thing I'll tell you. Nowadays we buy everything on Amazon or anything, right? What do the Amazon do? What does Amazon do? Amazon will give it to your house. Now same fridge if you are buying, you can buy a fridge also on Amazon, huh? Same fridge if you are buying, and if it gets damaged, then at your home, you will say, no, I don't want damaged good. So this is known as DDP, delivery duty paid. Last one, it is the best for the buyer, worst for the seller. X works is best for the seller, worst for the buyer. Okay? So this is risk which is transferred. Got it? X works. This is risk which is transferred. Here, now if in exam, and you definitely get one question on this, they'll ask you which is the best Incoterm for seller. For seller, best Incoterm is X works. Right? Which is the best Incoterm for buyer? Buyer is DDP, delivery duty paid. Now in between we have many Incoterms. 2 are gone. Total 11 are there. So now, suppose, let's say we are transferring the goods through ship. We are transferring the goods through ship. Okay? Yeah, sufficient. If you follow it sincerely, Shankar. See, everything is conditional. If you follow it sincerely. Have you checked in ABM? In ABM, if you have followed the PDF, you have cleared the ABM paper. All the students have followed the PDF and the classes have cleared it. BFM also same thing I am telling you. Follow, rectify that PDF. All of you guys, rectify the PDF as much as possible. You will get 60 plus in BFM. Okay? Because that I have prepared like anything. I have gone through a book for almost 5 to 6 times. Through a book, entire book of BFM. And then I have taken down those notes. That's why it's hardly 150 pages. 150 pages is what? 7 days you are having. You can definitely read 150 pages. If somebody is saying, I can't read, then no value. You can't give the paper also then. Okay? So, customs, see this. Now, let's say we are transferring the goods through ship. For ship we have, which are the Incoterms? Look at this. Seller will say, I will put the goods, bring the goods from here and I will put it, this is my ship. So I'll put those goods on the dock. Dock means what? That port. You have those fights now. In Hindi movies we have the fights, right? Fighting. Nowadays it has shifted to South Indian movies. Earlier we used to have this in Hindi movies, the fight. Hero jumps from here, there, all this. So that is basically the dock. So the seller says, I'll put the goods over here and then you take it. From here, loading of goods is taken by buyer. So that is called as FAS, free alongside ship. Free alongside ship. That is FAS. Okay? Write down whatever I am telling you. Free alongside ship. Then second is what? Seller will say, no. I will not put it over here. I will put it in the ship. Because loading of goods in the ship is also costly. So I'll put it in the ship. Then it's called as FOB, free on board. Here I've loaded the goods in the ship, free on board. Okay? Now the risk is over. Seller will say, see, I've put the goods in the ship. Now if the ship sinks over here, there is a fire to the ship. I'm not concerned. My job is over. So that is FOB. Next one is seller will say, okay, I'll buy the ticket also, this logistics cost, this cost of this ship. Okay, that also I'll buy. Transport. So that is CFR. So cost and freight. Cost and freight. FR means freight. Cost and freight. So the risk is increasing for the seller. See, earlier it was lowest risk. Now the risk is going on increasing. FAS over here. FOB over here, CFR over here. Now one more. Seller will say, okay, I'll buy insurance also. So CIF we call it. Cost, insurance and freight. Freight means transportation cost. So these all are the terms used in ship. And these are asked to you in exam. FOB, CFR, CIF. Compulsory question, one of these. Pre-shipment finance is given on FOB. Kindly note, pre-shipment finance is given on FOB. Okay? So this. Now this is about ship. But if I transfer the goods to Nepal, from my country Bharat to Nepal. So Nepal, where is the sea? No sea. So road. So in that case, what will I do? I'll put the goods in the truck and the truck will go to Nepal. So at that time, what do I use? I will not use any of these. At that time, I'll use these terms. One is FCA, free carrier. Free carrier means what? It is same as FOB. See this. FCA free carrier is same as FOB. Means here it was ship FOB. Similarly over here FCA free carrier. Second is CFRU was there over here. Now I'll call it CPT. On road it is called as CPT. See, CFR equals to CPT. Carriage paid to. What is CPT? Carriage paid to. To means what? Up to this part. Carriage, so truck charges are paid. Third, CIF was there. Here it is CIP, cost and insurance paid. So cost and insurance paid. So here cost also, carriage also, insurance also, everything is paid. So that is called as CIP. How many are these? 6, right? Plus 2, 8, DDP and X works. 8. Now 3 are remaining. Which are the 3? Now these are D Incoterms. DAP, delivery at place. It means what? Here the buyer will say, okay, my office is in Delhi. You put the goods in my Mumbai office or Mumbai godown. Put the goods in my Mumbai godown, not Delhi office. So that is known as DAP, delivery at place. Okay, DAP, delivery at place. Then DDU, delivery duty unpaid, means what? This customs duty. See, whenever you are bringing the goods from on the port or anywhere on the border, there is a customs house. Okay, that customs house will ask for customs duty. Whenever you pay the duty, seller pays the duty. Seller pays the duty. That's called as DDP, delivery duty paid. And whenever seller does not pay the duty, seller will say, no, I'll bring the goods over here. Now you pay the customs duty. So that is DDU, delivery duty unpaid. So these are the Incoterms which are used. Okay. These are the Incoterms which are used. Okay. Kindly note, quite tougher pattern. Where is the PDF available? Ganesh, it's available. Na? It's there. See, I have given it in over here in the pin comment. Check it in the pin comment. Sharma, check it in the pin comment. Check it in the pin comment. Okay, check it in the pin comment. Have you got it? All of you who are in the paid class, have you got it? Those who are not in the paid class, okay, those who are watching on YouTube, kindly join the class immediately. Because this PDF is available in the class only. Yeah. Okay. So now, got it everyone? Sharma got it, Ganesh got it, PDF. Shankar, you got the PDF. Reshma is already having it. Yeah. So next. Move on. Chalo. Next. Your foreign correspondent is maintaining a Nostro account, rupee account with your bank. Okay? Nostro rupee account. He wants to fund the account by purchase of rupees 30 million against USD. Assuming USD INR rate as 75.25502650, what rate would be quoted to the correspondent ignoring exchange margin? So exchange margin is ignored over here. So now there are 3 points: buy or sell, forward points, and exchange margin. So exchange margin is gone. So now only 2 points remain: buy or sell and forward points. So now you tell me, you guys will tell me now. You guys will tell me now. What will you tell me? You will tell me buy or sell. Buy or sell. Forward points and TT margin. You will tell me now. TT margin. First you tell me buy or sell. Whether this is buy or sell. whether it is buy or sell. Pay attention to the question. Your foreign party wants to purchase rupees. Foreign party wants to purchase rupees. See, by purchase of rupees 30 million. So now you tell me whether it is buy or sell transaction. Let me see how many of you are able to guess this. It is sell or buy. Sell or buy. Sell or buy. All of you are wrong. It is buy transaction. Why buy? What is happening in this? Say this. Let's say this is a foreign correspondent. Citibank. Let's say Citibank is a foreign correspondent. It wants to purchase rupees. So understand the sabji wala business. Don't forget the sabji wala business. If Citibank is getting rupees, so rupees is gone where? From SBI. See, this is SBI, Bharat. And this is Citibank USA. So SBI is giving rupees to this Citibank. So who will give the sabji now? Rupees is given by whom? When you give the rupees to that sabji wala will give you sabji. When SBI gives rupees to Citibank, Citibank will give dollars to SBI. Isn't it? Always understand the flow. Rupees are going out. So if rupees are going out, dollars will come in. If dollars are coming in, it will be a buy transaction. Whenever dollars come in, it's a buy transaction. Okay? So now, purchase of this. So now what is happening? Rupees are going out. Now the rate is given 75.2550 to 650. So you will be buying the dollars. So which rate will you use? 75.2550. Now what will you do? You want to find out the dollars now. It's a reverse transaction. Earlier problems you were finding rupees. Dollars were given. Rupees you found out. Now it's a reverse transaction. Rupees are given. Dollar are to be found out. So this is the way you will be doing it. See this. 75.2550 into dollar equals to 30 million rupees. See this, 30 million is given, 30 million rupees. So what are the dollars then? Dollar equals to 30 million upon 75.2550 upon. So divide it. So what will be the answer? 398,644. 3,98,644 rupees, dollars. This is dollars. Okay. This much is the dollar transaction. Simple one. Got it? Got it, everyone? Understand the transaction first. Now I'll give you one homework. Take this homework. In homework, what you do? TT is given as 0.2%. I'll give the TT also over here now. 0.2%. And now you give me this dollar amount. Okay. So now you'll give me the dollar amount later. Now you do it as a homework. Okay. TT, this is a buy transaction. So TT will be subtracted. So subtract the TT from that rate. Whatever rate is given, 75.2550 minus this TT. And then divide it. Division is required because you are finding dollars over here, not rupees. Another one. Mr. BCD wants to remit JPY. JPY means Japanese yen. 100 million. By TT value spot. As a payment of import invoice. Import. Import means what? Import means buy or sell. You tell me. Import means buy or sell. Yeah, definitely 5 days are enough. Read the PDF. Madhusudan. Okay, read the PDF without fail. Don't forget to read the PDF. Okay. So import means sell. Okay. I'll show you the previous slide also. Hold on. Got it? Import means sell. See this previous slide. It is division. Simple problem is this. This is very simple problem. And this problem comes in exam. This Nostro account problem. Simply you have to divide it. Dollar is, you see, understand the simple logic. Dollar amount should always be less than rupee. Because your divide, dollar is costlier. So it should always be less. Okay? Similarly now JPY problem. Look at this JPY. Mr. BCD wants to remit JPY 100 million by TT spot value as a payment of import invoice. USD INR rate is given as 75.2526. USD JPY rate is given as 116.5060. Margin of 0.15% is to be loaded on the exchange rate. Calculate the rate to be quoted and rupee amount to be debited to Mr. BCD. See, two problems are there. One is rate, second is rupee. Understand this problem. What is the JPY I wanted? JPY. So what is my transaction actually? See, there is a customer who has come to my bank. Okay. This customer wants some Japanese yen to be transferred to Japan. So now you tell me, Japanese yen is going out or coming in? Japanese yen is going out. Going out means what? Import. Because import, that's why money, dollar is going out. Dollar means instead of dollar now yen. Yen is going out. So it's a sale transaction. So what rate will I use? Sale, 75.26. See, whenever any foreign currency is going out, focus on the foreign currency only. Let it be dollar, let it be pound, let it be this, anything. Okay? So whenever any foreign currency is going out, so whenever any foreign currency is going out, pay attention, huh? Foreign currency is going out. It is a sell transaction. Whenever any foreign currency is coming in, it's a buy transaction. Simple, very simple. Okay, so here yen is going out, so it's a sale transaction. Import, anywhere currency goes out, foreign currency, it's sell. So now what do you want? Japanese yen to rupees. This is the answer you want. You want to debit rupees. See, the customer is in your bank. Your bank deals in what? Rupees. So you debit what to the customer? Rupees. So you want Japanese yen to rupees. But do you have the rate? What is the rate given? USD INR and USD JPY. So what will you do in this case? You want JPY to 2 rupees. So you use the chain rule. Japanese yen to dollar into dollar to rupees. Japanese yen to dollar into dollar to rupees. This is what you will be using. Right? So Japanese yen to dollar. Now what is given? Look at it. Pay attention to the problem. JPY to dollar. But what is given? Dollar to JPY is given. See, reverse is given. What do you want? J above, dollar below. What is given? Dollar above, J below. So it's an import. So you use 60. See this. I have written it over here. See what is given? USD to JPY is given. See USD upon JPY 116.60. See I have written it over here. So USD to JPY is given. But what do I want? What do I want? I want JPY to USD. See this. JPY to USD is required. So what will I do? I will reverse this. J above, U below. This 1 above, 116 below. So this JPY to USD, I will write it like this only. 1 upon 116.60 into USD to INR. So that is given simple. 75.26. Because it's import. Sell. 75.26. So multiply it. So what is the answer you will be getting? Japanese yen to rupees. So if you multiply this, you will get it as 0.645. 0.645. So is this your final answer? No. Why? Because something more is required. What is required? TT margin. Isn't it? TT margin is there. So TT margin, what will you do? It is sell. So you will be adding. First find out the TT margin. Say this. TT margin of 0.15%. So Japanese 0.645 into 0.15%. So 0.15 upon 100. Multiply this with these two. 0.645 into 0.15 upon 100. So you get it as 0.00096. So forget this 6. Only 9 till 9. So 0.0009. So what is the final rate then? 0.645 and then 9. Because 3 zeros, 645 will get added. So 0.6459. So your answer will be 0.6459. This is your Japanese yen to rupees rate final. But the problem is not over. What is the problem? Calculate the rate to be quoted and rupee amount to be debited to this customer. So rupee amount also is to be debited. So what is the rupee amount? Rupee amount to be debited to the customer is, see, what is the rupee amount? What is given? Japanese yen is given as 100 million. So Japanese yen is 100 million. Now this is very tough. If you don't understand this, you make a mistake in the problem. Everything done and you will make a silly mistake in the problem. How to remember this? How to look at this? See, JPY to rupees. What is the rate given? 0.6459 is to 1. This is what we got it just now. Okay. So now when I am having 1 rupee, okay, when I am having 1 rupee, I am having JPY of 0.6459. Pay attention to whatever I am saying. Or reverse, let's say, whenever I am JPY of 0.6459, I am having 1 rupee. So when I am having JPY of 100 million, so this 100 million, I'll have X rupees. I want to find this X. Pay attention. Whenever I am having 0.6459 JPY, this is what I got. Then I am having 1 rupee. So whenever I am having 100 million JPY, I will be having X rupees. So this X I want to find. So X is what? Cross multiply. 100 million upon 0.6459. So if you divide this, you will get the answer as 154, 820 and 000. So 154 million. 154.82 million rupees. Okay? Rupees. This is your final answer debited to this customer. So you will debit 154.82 million rupees to this customer and then send whatever the 10 million JPY outside. Okay? Million means what? Million. Those who don't know million, see this. This is American system. 1,000, million, billion, trillion, zillion. In an exam, you have only up to million. You don't have billion also. So 30 and 60. 30 for 1,000, 60 for million. That's it. Okay? Got it? Clear everyone? Next one. Let's do 1 or 2 more. Okay? This is something more difficult. Something which I have to tell you. See this. Whenever you have to do any payment immediately, right now. So this right now also has many terms. If I have to do the transaction immediately, this immediately has many terms. Means if I am doing with cash, suppose if I give you, let's say, let's take one example. You are sitting in the bank, you all guys are sitting in the bank, I come to you. And I give you dollars, cash dollars I'll give you. So that is known as cash, right? Cash dollars. So which rate will you apply? Whenever you are dealing with cash dollars, you will apply the cash rate. Cash rate is different. Cash rate is riskier. Cash rate is more than TT. Always cash rate will be more than TT. Because why? TT is online. No transaction, nothing, no handling cost. Here, I'll have to handle the dollars. Tomorrow, if the dollars get lost, then somebody robs the dollar. Then, who can rob TT? Nobody can rob online, right? Cash they can rob. So, cash rates are different. So, then you'll be using the cash rates. Suppose if I bring traveler checks to you. What is traveler check? What is a traveler check? This is a traveler check. Have I shown you? Let me see, where is it? This. I was dealing in this department. Means all these departments, I have worked in these departments. I had issued traveler's checks to many customers at that time. That was in 2006, 5, 6, yeah. At that time I used to issue the traveler's checks. So, traveler's checks are nothing but DD, demand draft. See this. If you look at traveler's checks, look at this. Pay this check to the order of. To the order of means what? Demand draft, isn't it? So it's basically a DD. Blank DD. Traveler's checks are blank DDs. Okay? They can be blank also. Or they can be in the name also. If it's in the name, again order means I'll sign it and give it, negotiate. This is traveler's checks. Whenever you are dealing with TCs, the rate to be used is TC rate. Traveler's checks, we have a separate rate. TC rate. Okay? That is also costlier than TT. Why? Because again, traveler's checks is a cash. It's a DD. Suppose if I rob your traveler's check, suppose you are having this, let's say you are in the bank. You are on the counter. Okay? I am the robber. I come to you and rob your traveler's checks and run away. So that those traveler's checks, I can use it anywhere as a cash in USA. Okay? So that's why it is costlier. Okay? The rate is higher. Then spot. Spot means what? All the transactions which are done for trade transactions, or generally all the transactions on the spot, means which are to be done in 1 day, 2 days. These are all spot transactions. Okay? Generally, we nowadays use this rate only, spot and TT. These two rates we use. These rates are gone now. Nowadays, the problem is nobody is bringing cash. Nobody is bringing TCs. It's gone. It's only there in your exam. In your exam, this question, if it comes, you follow these rules. If they are showing you cash, then use the cash rate. They'll give you. Separate cash rate they will give you in the exam. They will give you TC rate also. If they want to deal with TCs, they will give you TC rate. Just use that TC rate. Okay? And logic is same. If they ask you for margin means if you are buying the TC, so buy minus. If you are selling the TC, sell plus. Same thing for cash. If you are buying the cash, dollars, then minus margin. If you are selling the cash, then plus margin. Logic, it doesn't change. Logic is same. Okay? Spot. Spot we do it for all the trade transactions. And TT. TT means what? Telegraphic. What is telegraphic transfer? It is always done through SWIFT. SWIFT system. Now SWIFT is going this month or next month. This month only. December, I think so. SWIFT is going. They told. Let's see but whether we'll do it or not. So TT. Okay? These are all for immediate payments. Usance, future. Whenever you are booking a bill rate for forward, 1 month after, 2 months after, 15 days after, anything after spot, even 3 days after. 3 days after is also usance or bill rate or forward rate we call it. So anything after spot is known as usance or forward rate. So what will you do in this case? For usance, what do you do? You use bill rate. What is bill rate? Bill means risk. See, here is there any risk? There is no risk. Why? Because you are giving me dollars, I will give you cash, rupees. You are giving me TCs, I will give you rupees. Your TT has come, I will give you rupees. Means funds have come through this SWIFT, I will give you rupees. Simple. All these are simple transactions. Here what am I doing? I am booking the forward contract like the one which we saw earlier. Customer is booking the contract for next 1 month, 2 months, something like this. So there is a risk involved because you don't know the future rate. So whenever you are doing a risk transaction or future dated transaction, you will use bill buy or bill sell. Bill buy will be for export, bill sell will be for import. For immediate transactions, you will be doing TT buy or TT sell. Okay? Got it everyone? Clear this term? Everyone is okay? Getting this terms clear? Okay? Let me see. One more we'll do and then we'll stop. Okay? We'll do one more transaction and then we'll stop. See this. This was actually for homework. I had kept it for homework. You can take this as a homework also if you want. You are required to book a forward sale contract for USD 1 million delivery third month and another forward purchase contract for USD 2 million delivery second month. See, there are two transactions. One is sale, second is purchase. Okay? Sale is for third month, purchase is for second month. Look at this, delivery second month, third month. Delivery means what? Third month and second month, it's not on the exact date. It's in between somewhere. So buy low, sell high will be there. Given the INR USD INR spot rate is 75.9192. Premium quoted is under. This is the premium. Now look at this. This premium is, this is in premium. See, 75.85. So right side is bigger. It's in premium. And margins are given. See this, exchange margin of 0.15% to be loaded for purchase transaction and 0.2% for sale transaction. See, separately given. Purchase is 0.5, sale is 0.2. Rate to be quoted to the nearest 0.25 paise. So now what will you do in this case? It is simple transaction. There are two transactions separately. One is forward sale, second is forward purchase. So let's solve this. We will solve it separately. One is sale, second is purchase. One is sale, second is purchase. So let's solve for sale first. Sale. What is sale given? Firstly, find out spot. What is spot? You are doing a sale transaction. So 75.92. Say same rate we are taking, but 92 we are taking. Why? Because we are doing sale. So 75.92. The delivery is in the third month. Third month. Now, which is this date? Third month. Okay. So, third month means what? This second and third. Understand the meaning of third month. Third month means second month ending and third month ending. See, this is what I told you. This is always at the end. End. 1 month means 1 month end. 2 month means 2 month end. 3 month means 3 month end. So now I want third month. I don't want 3 month. I want third month. So third month means what? Between second month and third month. So third month begin and third month end. Pay attention. Say this. Third month begin and third month end. Right? So third month begin is what? Third month begin means second month end. 1900. Look at this. Third month begin means second month end. Right? I told you earlier, first day of every month is last rate. So 1900. So now it is 1900 over here. What about this third month end? It is same over here, 2850. So 2850, take this. But your transaction is in between. So it will be buy low, sell high. So use it. 75.92 is given. And these are all 19 and 28.2850. So use 4 digits now because 4 digits are given. So 9200. So what you have to do? Add this. See, forget this nearest 0.25 paise. Forget it right now. Don't use this 0.25 paise nearest part. You do simple calculation. So 75.9200 plus 1900. Should I do plus or minus? That's also important. Is it premium or discount? Premium. So I'll do plus. So 75.9200 plus 1900 and here 75.9200 plus 2850. So in any case, look at this. I'm adding 1900 over here and 2850 over here. Who will be higher? Logically, this will be higher. So why to waste time on this? I'm doing sale transaction. First one is sale. So why to waste my time on this lower one? So don't do it. Directly do this third month end. So 75.9200 plus 2850. So 76.205. This is your rate for sale third month. See this first transaction. Again, this is your first transaction third month 76.205. Getting this, everyone? Clear? Everything is okay up till now? You're getting it? Yeah, Kishore Kumar, PDF is not downloading. Kindly join the Telegram channel also. There also it's available. Actually, it should be downloaded here also. But if you are not getting it, then kindly join the Telegram channel also. There also it's available. I have given the link also. So got it now? So this is done now. Sale is done. Now do the second month purchase. See this buy. Now same rate 75.91 but not 92 now because I am doing buy. So 75.91 and now second month. Second month means what? First month end, second month end between these two. So second month begin means first month end, isn't it? Second month begin and second month end. So second month begin. What is the rate for second month begin means first month end. So it is buy now 750. So 0750. What is my spot? 75.9100. 0750. What is the second month end? 2750. No, 1800. Right? Second month end is 1800. So should I waste my time on this? I should not waste my time. See, we have to do buy low, sell high. So logically you can see this that 75.9100 minus 750 if I do 0750 or minus 0.1800 I'll do. So where will I get the low rate? See, what am I doing? Buy low, right? So this is not minus plus, it's a premium currency. So premium means plus I'll do it. 75.9100 plus 0750 or 75.9100 plus 1800. So which is lower one? Buy low. So this will be lower. So I'll be using this 9850. See, add this, I'll get 9850. So I will not waste my time on this side now. That much logic you should develop now. So now what has happened? I have come to this part. Up till now, what have I done? I have found out the rate for third month, rate for second month. But TT margin is still remaining. TT margin 76.205 into 0.2 upon 100. Why 0.2? Look at this. 0.2 for sale, 0.15 for purchase. So 36.205 into 0.2 upon 100. So 0.1524. Now what am I doing? Sale. Sale means plus. Sale means plus. So 76.205 plus 0.1524. This I will plus now. So what? This is my final rate, 76.3574. This is my final rate. Similarly for buy now. What was my buy rate? 75.9850. So 75.9850 into 0.15 upon 100. See this 0.15. So don't forget this 100. Never forget this 100. So you'll get it as 0.1139. But that I will subtract now. So 75.9850 minus 0.1139. See this. So you'll get it as 75.871. This is your final rate. Now if they tell you to do it to the nearest 75 paise, 25 paise, then do it nearest. 35 nearest is what? 50. 87 nearest, 75.87, right? So to take it to the nearest. Okay? Whatever nearest one, you can take it. Generally in exam they don't ask you these things now. Okay? So here your problem ends for this. Okay? Got it? Yeah. Got it, everyone? So we will stop over here today. Why margin is minus? My God, why margin is minus? Because it is buy. Whenever you are doing a buy, margin is minus. Whenever you do a sell, margin is plus. Okay? Got it, Ravindra? Kindly follow this video again. Okay. Whenever you are doing a buy transaction, kindly note everyone. Whenever you are doing a buy transaction, the margin. Remember that slide which I showed you. This slide, which let me show you this slide again if I am having it. Where is this slide? This one? Yeah. See, this slide is of very much importance. Let me show you here. Where is it gone? Yeah. See, this slide is the overall crux of the problem. Everything lies over here on this slide. Everything is on this slide. Buy or sell. Again, I'll just repeat. Buy or sell. Whenever it's export, you will buy. Whenever it's import, you will sell. Forward margin. Whenever it's premium, you will plus. Whenever it's discount, you will minus. PT margin. Whenever it's sale, you will plus. Add. Whenever it's buy, you will minus. Any transaction on the first day or the last day, no buy low, sell high. Whenever it's in between, you will use buy low, sell high. If you know the fixed date, then no buy low, sell high. Whenever you want to take the rate of the first day of any month, it is the last day of last month. Okay, earlier month rate is taken. Okay, so this is what. Chalo, bye everyone. Okay, let's meet again tomorrow. Okay. Hema, what do you want clarification? Please clarify. What clarify? Anything you want? Hema, you want anything? You ask for something, please clarify, but no question is seen. Bye Rishma, bye everyone. Got it, na clarification? Any question you have? Okay, tomorrow same time, 7 p.m. Okay. Thanks Madhav. Okay, thanks everyone. Okay, yeah, so YouTube is going on simultaneously now. This was a free class for YouTube. From tomorrow, nothing. Today was the only class for YouTube. Okay. No, that is gone. Marathon is gone. 6 p.m. it was. That was a recorded session. Chalo, bye everyone.